Well, to the markets, a bit of a turnaround for the local market today. The all-share 0.75% in the positive, with heavyweights Naspers and Prosus the big gainers. They up more than 6%. I want to speak to today's market commentator on the movements. Faheema Adia is from Momentum Securities. She joins us now. Faheema, thanks indeed for your time. Well, internationally, the mood seems to be a bit better today. Those insurers, though, locally, I see, did take a hit, but otherwise, we've had somewhat of a green day on the market.
Evening, Devon. Yes, it was a decent day for the JSE today. So the market was slightly up by around 88 basis points to around 70,500 points. And that's mostly been driven on the back of the resource and industrial sector. So quite a few of the bigger companies have released their results today. Global markets, on the other hand, has continued to experience volatility and mixed performance, however, across the board, as investors wait for that important U.S. Jackson Hole conference tomorrow, where the Fed is expected to discuss their views on interest rates hikes in response to the very high levels of inflation coming out of the U.S. If a more hawkish signal is given, we expect that that should have a negative impact on the global markets and in turn impact the JSE. On a more positive note, the oil price has been steady today at around $101 a barrel after news of a possible agreement for Iran to resume exporting oil to the market. Oil price came under pressure in the past few weeks after OPEC said that they would look to cut their output. So this new agreement with Iran is quite a positive, seeing that it could offset some of those cuts. And we're hoping that the price of Brent crude falls below $90 a barrel, which would bode well for South African consumers, as the petrol price would then likely come down in the next few months.
Yeah, that might be some good news for inflation going forward. All right, so some company news out today. Let's start with the biggest platinum miner, the Sibanye Stillwater. I mean, their profits were lower, but there's some recovery in the offering here, because here's a company that was hit by both floods and strikes, but it seems like their share price did well today.
Yes, definitely, Devon. So it has been a very challenging first half for Sibanye, given those floods and the industrial action which impacted the company for almost 3 months, and they've had to halt all of their productions due to that. So the PGM and gold production definitely took a knock due to that. Also, the commodity prices have come off their highs recently, as there's now talks of the global market slowing, and that lower price has also impacted results somewhat. They did say that they have a positive outlook for the second half of 2022. So we think the market has responded pretty well to that, and the stock price was up 4% today. So it's definitely one to keep an eye on, as it's trading at quite a favorable price now.
Faheema, before I let you go, just a quick one. What did you make of Distell's full year results? I mean, part of the year, this financial year, was hit by alcohol bans. We'll remember that. There was a glass shortage. There was also there, but a very good showing by Distell. Headline earnings up 37%. What did you make of it?
Yes, a very strong set of results coming out of Distell. We were quite happy with that. Like you said, it was driven by the relaxed lockdowns and fewer alcohol bans. Also, the sales in Africa seem to be quite strong. There has been that challenges with the supply of glass and aluminium, but they did say they're expecting that to recover in the next year. Also positive to note that they've cut debt quite a bit, by about 86%, so that reduced finance costs quite nicely. Interesting on that one to note that they say that the higher end brands are not performing as well as the mainstream brands, so consumers are looking to buy more of the value for money options, such as your boxed wines as opposed to the bottled ones, which shows you that the SA consumer generally is under pressure. And this is a trend that we've been seeing across the board, where consumers are down trading to cheaper sort of brands and more value for money options.
That's an interesting one. I'm going to sneak one more in here, because I found the Murray & Roberts update also quite interesting. They're flagging a return to profit for the first half year. I mean, the reason why I'm interested is because one gets to ask yourself, with the government infrastructure rollout going at a snail's pace, I'm just wondering what's so positive about their update.
Yeah, so quite a positive update from Murray and Roberts. So they've returned to profit from a loss of last year, and that's been driven by a record order book of 59 billion rand, they say, and a strong project pipeline. So the market, interestingly, didn't respond very well to that result. Share price was down almost 8%. We think it's likely due to concerns about the difficult trading environment and potential global slowdown, which would have investors cautious about investing in the construction industry. Like you say, the government has failed to deliver on the infrastructure spend that was promised in the past, and the construction industry has pretty much been in a slump since 2009. If you look at some of the stats, interestingly, the construction income has decreased by 7.1% between 2017 and 2020. So definitely a very challenging industry to be in at the moment. And it seems Murray and Roberts, however, is holding up despite that.
All right, well, that's where we leave it. Thanks very much indeed. Faheema Adia is from Momentum Securities. Well,